Hello, this is Moneyline with Nancy. Welcome from wherever you're watching. I am Nancy Naji. Thank you all for joining us today. In a short while, I'll be taking you through the business news for today. I'll also be taking you through the market. We'll be looking at market inflation as well as investments today on the program. The National Bureau of Statistics is billed to release December inflation data later today. Today is January 16th, if I'm not mistaken. So we're expecting inflation data from the Statistics Agency later today. What will it tell us? The last count for inflation November 2022 tells us that inflation rose to 21.47% from 21.09% in October. Are we still going to see that uptick, especially as we all went for festivities? We were all engaged in holiday season shopping, spending money and all of that in December. So we will be expecting the NBS to do just that, to release that data in a few hours from now. If it comes within the program while I'm still here, definitely we'll bring that to you. But okay, I mentioned earlier we'll be talking about markets, inflation and investment. What's the strategy at this year? The Nigerian stock market gained about 20% last year. That's talking about the YTD year-to-date return. What are we going to be expecting this year? My guest will be joining me on the program later to speak about that. But let's get started with our business news. The National Salaries, Incomes and Wages Commission says it has initiated a process for the review of the national minimum wage. The Commission's head of public affairs, Emmanuel Njoku, stated in a statement on Sunday in Abuja. Njoku stated that as part of the process to review the minimum wage, which is due in 2024, the Commission has held a series of meetings and training sessions to ensure nationwide meetings monitoring of the Minimum Wage Act 2019. Njoku noted that the monitoring will begin on January 23 and will ascertain the compliance level of public and private employers and organizations. The federal government has concluded plans to inaugurate 1,071 completed houses in 8 project sites nationwide. This was disclosed in a statement signed by the Federal Mortgage Bank of Nigeria Group Head Corporate Communications, Timan Elayo. The statement revealed that the houses constructed under the National Housing Program would be commissioned between January 16th and 26th of this year. The Nigerian Export Promotion Council has announced that Nigeria recorded an increase of 39.91% in the 2022 non-oil export performance, which translates to $4.82 billion in the non-oil earnings for 2022, the highest in the agency's 47th year history. This was disclosed by the Executive Director of the NEPC, Dr. Ezra Yakusek, at the presentation of the executive summary of the activities of the Nigerian Export Promotion Council and presentation of the non-oil export performance for the year 2022 in Abuja. Yakusek attributed the performance to the several export intervention programs initiated and executed by the Council and other agencies of government. Speaking on the significance of relearning, J.T. Oshoke-Abu, who was of the view that the world is constantly evolving, and for you to be successful in life, you have to keep up with information and maintain your knowledge base. He mentioned this on the program a few days ago. Take a listen.
Okay, yeah, so the significance of learning is that, look, so what any generation at all should learn, like I've established already, is that learning must be a continuum. It's a circle. So learning is in stages. So what you were used to 5 years ago. So I'll give you a classic example, right? So when we went to school in the like 30 years ago, we were taught in geography that Pluto was a planet.
Planet, yes.
Right? And we wrote that. So my kids now in primary school, they're coming home with their assignments, and I'm seeing that, hello, the planet, the solar system, Pluto is no longer a planet. Right? So there is, what a Gen Z or anybody should realize at this moment is that open-mindedness. Information, knowledge will change. So what used to be relevant now may no longer be relevant tomorrow. So what got you this far may not take you farther than where you are at the moment. So in every sphere of life, irrespective, it cuts across generation, it cuts across career, and these are practical. So if you want to keep being relevant, if you want to keep getting results that you desire, then you must always recognize and be aware that things are changing. And if you want to move with the times, then you've got to be open-minded, to be willing and ready to also change and move with the tides, move with the trends, in line with what the world is offering and how you can also still become relevant in playing in this present world.
Deposit money banks borrowed the sum of 21.87 trillion naira from the Central Bank of Nigeria in 2020 through the standing lending facility window and repurchased lending platform in 2020. This is a 260% increase over the 5.7 trillion naira recorded through the same window in 2022. It is, however, a 19.3% decrease from the 27.05 trillion naira borrowed from the Apex Bank in 2021. Figures obtained from the Nigerian Electricity Regulatory Commission in 2022 first and second quarter report shows that international and bilateral power consumers that receive supply from Nigeria owe the country about 4.71 billion naira. It was discovered that despite ongoing efforts to settle the debts, Nigeria's 10 international, bilateral and special power consumers failed to remit the sum within a 6-month period. The commission noted that the power companies owed money to the Power Market Operator Ventures and the Nigerian Bulk Electricity Trading Company. The Nigerian Exchange Limited is to host the 2022 market recap on 2023 Outlook event on Wednesday, January 25, 2023. The NGX market recap and outlook event is the previous year's market performance and to provide expert predictions for the Nigerian capital market and the broader economy for the new year. Statistics from the Nigerian bank settlement system: a 53% increase in the values of online bills, also known as e-bills. The most recent NIPS data revealed that the value of bills paid through the electronic channels increased to 2.8 trillion naira in 2022, up from 2.3 trillion naira in 2021. NIPS reports that in 2022, customers transferred 19.4 trillion naira via mobile phones, which is a 142% increase year-on-year compared to 8 trillion naira in 2021. Also, the volume of mobile inter-scheme transactions rose by 151% year-on-year from 284.5 million in 2021 to 609 million in 2022. The liquefied natural gas exports from the United States to the European Union doubled in the first 11 months of 2022. According to a report by the European Commission, the report stated that the EU imported 52 billion cubic meters of LNG from the United States from January to November of 2022, compared with 22 billion cubic meters for the whole of 2021, while the US LNG export revenue soared to $35 billion in the first 9 months of 2022, compared to $8.3 billion over the same period in 2021. All right, that's it for the business news. Let's quickly take a break, and when we return, I'll be running you through the market numbers for today. Don't forget to join us on all our social media platforms. The handles are on the screen. We will be right back. Hello, and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to the least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery.
We need to come forward and do something different, so that we move from a situation of looking at things from purely a consumptive approach to a productive environment.
The government and the people need to really agree on the need for a departure from business as usual.
We are now on a process of recovery. It is what I call a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy Naji. It's so nice to know that you're joining us again at today. Quickly take you through the world as I will be running through the markets for today, but definitely I will have to take you through how we ended last week. The local market saw investors bask really in a sea of green as the benchmark all-share index posted a 2.52% week-on-week performance to close at 52,512.48 points, which is the highest level in 7 months. We saw that Total and MTN Nigeria saw active trading to end last week. Following the upward trend, the market capitalization increased by 2.5%, as you can see right there on the wall, to reach 28 trillion naira, and the performance of the year-to-date return increased by 2.46%. Weekly volume increased last week by about 10.9%, while the value decreased by about 65.73%, which moved in the opposite direction. If we take a look at how the market really fared, it really came to a happy close for the majority of last week. Now let's take a look at interbank rates. It remained largely unchanged, and we're around single-digit levels last week. Both the open buyback and the overnight rates decreased, and this week we're anticipating little change in interbank rates as system liquidity is expected to be increased by the expected inflow of 217 billion naira in FGN bond coupons. Last week we saw that the Treasury bills market was mixed. The short to mid end of the curve saw a disappropriate amount of buying activity, while the long end was dominated by the bears. The DMO sold the same amount of notes, about 56.94 billion naira, as what was offered at the midweek Treasury bills auction. Due to the inflow of FGN coupons, we're expecting some kind of buying activity this week. Last week, the FGN local bond market experienced bearish trading sentiments. Nevertheless, there has been some cherry picking, especially on the 2027 and 2028 maturities, although on a less aggressive note. What are we expecting this week? We expect that the bearish sentiment will persist this week. Now let's take a look at the FGN Eurobond market. Last week it was largely bearish with widespread buying activity. And what are we expecting this week? We're expecting that the markets will be affected by current global events. Now at the investors and exporters window, that's the FX window, last week, the Naira lost about 5 basis points to the dollar. Traded at 461 naira 90 kobo. That's against the US dollar. That's how it closed at the official market window last week. The Central Bank of Nigeria also says that foreign reserves were at 37.20 billion naira on January 11. Now, this week, talking about global markets, European markets are really heavily focused on the World Economic Forum in Switzerland, that's in Davos, Switzerland. Heads of state and business executives mixed with academics and entrepreneurs, will be meeting from today. The conflict in Ukraine, economic unpredictability and instability, as well as climate change are among the major topics that delegates will debate and discuss. This year's World Economic Forum is taking place in the midst of a cost of living crisis for many, and some leaders are skipping the event because of crisis at home. Only one member of the G7 is expected to attend this year's forum. And who is that member of the G7? German Chancellor Olaf Scholz. He will be attending this week's World Economic Forum. Now, if we move over to the United States, we saw that stocks increased last Friday as investors took in bank earnings and increased their bets that inflation could decline in 2023. Friday's close was positive for all the major indices in the United States. But what you're seeing right now, the markets are closed for a holiday. Now, following the upward trend established in Asian markets overnight, European markets edged cautiously higher today, helped by encouraging investor sentiment brought on by the US last week's data on cooling inflation. I also told you earlier that European markets have focused on the World Economic Forum happening in that region. Now, talking about markets in the Asian Pacific region, they mostly increased as expectations of lower US inflation boosted the region's investor sentiment. Investors will also be watching this week's crucial Bank of Japan. Bank of Japan is the central bank of Japan, to see if the Bank of Japan will defend its extremely stimulative policy. Now, on optimism, really, we've seen that China's reopening will also increase demand. And I'm moving over to oil prices now, and that optimism would increase demand. Because of China's reopening. Oil prices fell in early Asian trade today, but they remain close to the highest levels since the beginning of the year, after reaching their highest level in almost 9 months today. Now, what are gold prices doing? Gold prices are stable as a weaker dollar and anticipations of slower U.S. Fed interest rate hikes will add to the precious metal appeal. Because of cooling inflation in the United States, which we saw the data last year for December, according to the Bureau of Labor Statistics in the United States, releasing that inflation cooled down at about 6.5%. So analysts and investors are looking at that the U.S. Fed would increase interest rates, but at a slower pace, not the aggressive interest rate hike that we saw last year. 7 interest rate hikes for the United States. Meanwhile, here in Nigeria, we had 5 interest rate hikes that made the MPR, which is the monetary policy rate, end at 16.5%. So that's it for the markets, but still don't go anywhere. I will be right back when we come back from this break to take you through markets, inflation, and investment this year. It's still the beginning of the year. What are you really looking at? How investment savvy are you this year? Or are you of the view that, okay, I'm going to sit on the fence and see how these elections will pan out? Or are you one of those that leave your monies in the bank and you allow it to erode? Are you making your money work for you? What are the channels by which you can invest? And also have it in mind that not all investments are for you. So you've got to be investment savvy. But my guest will be talking about the topic markets, inflation, and investments when we return from the break. You can chat with me on Twitter, Nancy Lo-Energy, Moneyline TV also on Twitter. You can also find us on Facebook, on LinkedIn, on Instagram, on other social platforms. We will be right back.
The truth untold. We restored democracy. We initiated due process. We created the EFCC and ICPC. We brought Nigeria out of debt by achieving $18 billion worth of relief and $30 billion overall reduction. We revived the rail system. We upgraded agriculture. We brought in the mobile phone and digitalized Nigeria. Under the PDP, the Nigerian economy was the strongest in Africa. Though Nigerians made their choice, today, we all know better. Nigerians, do not despair. Hope is in the horizon. We are putting in the work and refreshing our drive to rescue and rebuild Nigeria. Together, let's make it happen. PDP. Power to the people.
Here is a new and refreshing offer for our esteemed audience across the globe. The new AIT Cloud TV is an online streaming service that offers you attractive opportunities to view our rich, exciting, and entertaining programs anytime, anywhere. AIT Cloud TV is available on the web on www.ait.app, Apple TV, Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
Hello, and welcome to the program. This is Moneyline with me, Nancy.
So we really have to keep thinking out of the box about how to get money to be least accessible in our society.
Everything has to be re-examined in our economy, in our health system.
We are also ensuring that government does not continue to manage this refinery, because government is not really equipped to manage refinery.
We need to come forward and do something different, so that we move from the situation of looking at things from purely a consumptive approach to a productive environment.
The government and the people need to really agree on the need for a departure from business as usual.
We are now on a process of recovery. It is what I call a bumpy journey to an uncertain destination.
This is Moneyline with me, Nancy Naji. It's so nice to know that you're joining us again at today. All right, welcome back to the program. My guest is joining me right now. He is Tajuddin Olayinka, the Managing Director at Wyoming Capital. Mr. Olayinka, welcome to the program and thank you for joining me today.
Good morning, Nancy. It's my pleasure.
Good morning. Where can we start? I was actually surprised that the market could pull a 20% gain last year amid the turbulence, so to speak, that we saw somehow in the market space last year. And let me talk about the turbulence. I'm speaking about, of course, high inflation as well as interest rate hikes that we saw the Apex Bank ending the MPR for the year at 16.5%. And the market was still able to pull that when global markets like the United States, European markets, as well as other markets were really wilting from global events. What really made that happen, briefly?
Okay, I think the best way to explain that is to look at how it all started. You know, if you recall, you see that shortly after the MPC meeting, you know, did the further hike in MPR in November. just shortly after that, the market pick up again. Ordinarily, market will have reacted, negatively, just the same way it did in the past or in the previous MPR hikes. But this time around, I think market looked beyond just the MPR hike. Market was somehow bullish on the possible transition from one government to the other, and that seeing clearly that the end result of this transition would be that we are moving from from a government that seems to favor public sector domineering focus to a government, or possibly to a government that will have a private sector domineering focus. So market also pricing all those factors, the possible transition, from public sector dominance to a private sector dominance. So that also informed the decision of some of these investors, especially those savvy investors, those highly technical, highly skilled investors in the area of technical analysis. So they have seen that yes, this hike is just for a while, and of course this high interest rate is just for a while, and the inflation number that we are seeing is also for a while. After some time, we will see a better economy and a better market. So investors are actually bullish on what will happen in May 29, not just the election anymore, because they have seen clearly that the election is just between basically three candidates that are pro market. So that would be positive for the market. So that essentially explains why some of these investors took that decision. Again, don't forget also that we are also in a year end financial year end for some of these companies. Tell those companies that have 31 December as year end. So for those of them, 31 December 2022, it's a year end for some of them that will be bringing out results between now and end of April. And so some of them also believe that at that point they should begin to position themselves for either capital appreciation or dividend payment that will come between March and April. So two factors, the transition factor, and then of course the usual sentiments around the financial year end, and that's why you see a bullish market, bullish on transition, bullish on the financial year end. I think that explains what happened there, what started in November, and that we are still seeing at the moment.
Now, what do you think is ahead of us this year, the next 11 months, talking about the capital market or the stock market? If you can also speak to me about what you see ahead for how the money market would also behave, and yes, the money market, the bond market, even the Eurobond market. If you can give me what your analysis would be for these three categories of markets this year, if you can.
Okay, yeah, we are going to have an interesting market beginning from June 2023. Even between this January and May 29, we still see a semblance of up and down. But whatever anybody is doing now is doing that in anticipation of what will happen post transition. As soon as we have a new government, everybody is actually trying to play safe on what that new government will be. But let me also add that it's not going to be a free ride. Come June 2023. As soon as we have new government, even though these leading gladiators, these leading presidential candidates, these three leading ones that we have are more private sector centric, but it's not going to be an easy ride for them. Going by the fact that we have possible turbulence that will come from the securitization of ways and means. That will possibly be put to market before the end of the year, and other headwinds that will come because of the fact that this new regime that will come, either of these three candidates, this new regime that will come based on what they have said about what they are going to do about managing exchange rates, coming up with a very robust exchange rate regime that will be market friendly and that will determine the price of products generally. And of course, looking at what they expect to see also in the goods market, financial market, and foreign exchange market, we hope to see a market that will also be in transition on its own, because there will be need for some adjustment. Economy we have to run through some basic adjustment, between June and end of 2023. So this adjustment will come with the usual short-run adjustment pains that everybody should prepare for, and of course the long-run aspect of it is will give us a very normal market that everybody has actually anticipated. And so for me, we will see for the money market, particularly the fixed income space, we will see a bit of depending on how CBN decides to offload the securitized ways and means to the market, because that will surely bring about demand side imbalance. So that I expect that one to create a hike in interest rate in yield generally. But as this yield goes up, we expect this yield to be a major attraction to foreign investors who are eyeing higher yields, in Nigerian fixed income space. And so as they come in to participate in the market, we expect that to actually fill in the demand side imbalance, that gap that will come from the demand side imbalance of the fixed income market, so that eventually the yield will come down. But there's a proviso. It won't just happen without the new regime or the central bank at that time, managing the exchange rate or coming up with what some of these three leading presidential candidates have said about what they intend to do about exchange rate regime. So once they are able to manage the exchange rate well and the exchange rate regime becomes market friendly, then we will see inflow of foreign portfolio investment into the economy that will encourage interest rate to moderate to a level that will have much lower cost of capital in the economy. And of course, it will be something that most private sector investors or private sector players will be able to leverage on. So market will be bullish going forward, but market will have some kind of a up and down as we move into June, and as CBN decides to offload the ways and means that have been securitized in order to regain liquidity, because there's no way CBN will hold on to ways and means, to securitize their ways and means in perpetuity. They have to offload to the market in a very systematic manner, so that it does not create a problem for private sector borrowers. They have to do that so that they can regain liquidity. So for me, those are the assumptions. Once that come into place, we will see a very high interest rate regime. Then subsequently, we will see total moderation to the point that we have a better lower cost of capital in the economy.
Okay, Mr. Olayinka, you almost brought it out of my mouth, because if I heard you clearly, you were talking about June 2023, but I'm thinking of the survivability of the economy between now and June, and how the markets are interpreting these data coming out of our economic handlers, talking about 77 trillion naira public debt. If the CBN ways and means are eventually securitized, what else? High inflation. Of course, December inflation rate is still being expected. So with all of this data, how do you think that the markets will survive? Bearing in mind that also, if we take a look at the stock market, for instance, majority or almost all the companies listed on the exchange hire employees. We've seen abroad, for example, like for instance, Goldman Sachs says is going to disengage its employers. So is the market also looking at that aspect, whereby the cost of production has gone up for majority of the companies that are listed? Will they be disengaging their workers? Will they be right sizing or downsizing or whatever they call it, vis-a-vis the economic data coming out of our economic handlers? So how is the market interpreting all this data between now and June that you are foreseeing a change in tide?
Between now and June, we don't need to go far. We have seen, what numbers are. We have seen clearly that the numbers are not too good. The inflation is still very high. And at 21.45. So you cannot be celebrating that. And we do not even think that the inflation rate will moderate at this time because of the fact that those basic things that will make inflation to moderate are not clearly there. We have also seen that CBN attempt to hike MPR is not necessarily because they want to tame inflation. It's because they want to avert reversal of capital flow, so that we don't see local investors or even foreign investors moving out of the economy to go and invest elsewhere because of high interest rates. So that is why we still see some of them around, and that is why CBN is doing all this interest rate hike. Yes, the turbulence is still there. I mean, what do you have to say to an economy that is coming up with about 2.something% GDP growth rate? So I mean, when you look at the growth rate in GDP, that the figure for third quarter and the figure for the fourth quarter and probably for the full year will not be too far from what we saw in third quarter. So given those indices, we are not likely to see a very strong market based on what is happening now. But like I mentioned earlier, most of the investors are reacting beyond what they are seeing now. They are reacting to factor in what will come post Buhari administration. So anyone that is just looking at what is going to happen between January and early June, or say May 29, will be missing the point. But the most important thing is for any investor or any rational investor to look at what is happening now and look beyond what is happening now to see whether better things can still come post 2020, post 29 May 2023. So for equity market, what we are seeing currently is what we continue to see between now and when results are finally released. Although in between this period, we are likely to see profit taking, very aggressive profit taking, and of course bargain hunting, and that may slow down the index that is actually moving up. If you look at what happened in 2022, the year to date in 2022 December, 30th December, you saw that main board stocks listed under the main board actually drove the market up, significantly, and that the premium board hasn't done much. But this year, if you look at it again between January 2nd and now, you see clearly that that same main board is not even driving the market anymore. What is driving the market today is the premium board. So when you factor all these things, that market is just those sectoral indices that didn't do much in 2022 are now trying to catch up. It then follows that anyone that is playing that market is will try to position himself or herself in between, what happened towards end of 2022 and what we are seeing currently. So equity market, we will see what we are going to see. Of course, it will be both. We will still see a bit of a bearish sentiment that will come from profit taking, and of course, we will still see aggressive bullish sentiment that will come from bargain hunting. So this thing will be playing side by side, as we progress into April 2023. For fixed income market, of course, the yields are moderating there, and the yields will continue to moderate between now and June, until CBN decides to offload to the market. I don't expect CBN to offload before May 29, because I'm not sure government will want to encourage them, and I'm not also sure it would be positive for CBN to offload the securitized ways and made to the market because of the yield. The yield is still higher than what government is trying to pay. That is 9% that the federal government is proposing to pay on ways and means. So CBN will need to wait for yields to moderate slightly downward to a point where they can actually have a 100% recovery from the money that they lend to federal government. Otherwise, if they do it now, they'll be selling at a discount. So they will still have to wait, or they will be only be pressure to begin to sell if we move into if you move to the second half of the year, when the new government will have taken position and they begin to look at the economy differently. Like I mentioned, there's always a gold mine when you have a regime that has private sector centric. When you have that, you see a lot of dynamics. You see a lot of dynamics. You see opportunities. much more than what we are seeing, presently. So for me, I think we will continue to witness what we are currently witnessing in the fixed income market and equity market. Bullish sentiment, bearish here and there. It will be up and down, but the market will be strongly bullish up to the end of May, until we have a new regime that will come up with what should be the ideal shape or ideal structure of the economy that will encourage private sector investment. That's for me, it's a good one.
Okay, if you take a look at these categories of markets which we've talked about, of course, the stock market and the fixed income market. Which one do you think that investors will really, be attracted to between now and June 2023, bearing in mind the yields? We did mention earlier that the stock market pulled a return of 20% for the year 2022. That is exactly at around inflation rate. Or if you take a look, okay, we'll get December just about close to, let's say, 2% above inflation rate that the stock market pulled last year. Talking about the fixed income market also, we've also seen it a bit topsy-turvy. So where do you think that investors will gravitate to this period? Taking off your capital market hat.
Well, we have seen that the yield or the discount rate on the Treasury bill has actually gone down so seriously. It's gone down as low as just a little above 2%. When you have that kind of for instance, for 2020 for January 2023 bills, we are seeing that at above 2%. And then the maybe 6 months, 9 months bills are just a little above 5%. So when you look at that kind of most investors are actually playing that short dated that short end of the market, that short end of the curve. We still see investors who are trying to place it, because most people are trying to place it, take a very short term position, so that at the end of the day, you can take a better decision on what will happen after May 29, 2023. And so we see more investors taking position in that treasury bill market. The bond market, there will be a bit of caution there, because the moment CBN begins to offload to that market, we are going to see a spike in yield. And so for that reason, most investors in the fixed income space will still want to exercise caution, not to go and hold themselves down on a stock or on a security or on an investment. I mean, they may not be able to realize 100% face value, going forward. So there will still be a bit of caution there. The equity market, of course, oil and gas is still doing well, and we have seen again, like I mentioned earlier, premium board seems to be pulling the market up. Main board is not yet doing much. But if you look at it, if you look at the entire market, the entire equity market, you see clearly that most of the stocks are just, especially those of them in the main board and also in the premium board, but in the entire market as a whole, we have seen that some stock prices are still below their high. They are 52. We still see a lot of headroom, for stock prices in that area. And so, what it means is that we may still see a bullish one that we are witnessing currently in that space, especially for those stocks that are trading below their 1 year high. But a stock that is just going back, that is just coming up with a year low. It should be necessary for investors to also exercise caution there to find out why is this stock trading at a year low when others are moving towards their year high. So these are the kind of thing that will shape decisions among investors generally, both in the fixed income space and the equity market. Another thing is that some investors are beginning to show interest in real estate investment. So and for those of them that are listed on an exchange, that real estate investment are listed on exchange, to be an opportunity for those investors who are bullish on the transition, who believe that the transition the new regime will hold a better private sector driven economy, to begin to look at real estate investment, because most activities will come around that area too, especially for those of them in the who are investing in stocks, in stocks like I think we have a USC property, and we have some of these real estate investment trusts will be an opportunity for those of them who don't want to invest in liquid stocks or in liquid real estate investment trusts. So, of course, banking stocks, generally, for me, I'm bullish on banking stocks, either now or beyond the June 2023. Anybody who's looking at what will happen between now and June 2023, I mean, should be also looking at the banking stock, because most of the reforms we'll see in the economy will be based around the banking sector, and so banking stock will benefit. Inflation will still be there. I'm not sure we are going to see any serious moderation at this time, but for whatever it is, we should, investors should just be able to exercise caution, not to be so aggressive in the area of bullish investment.
You've really dissected, you've given me at least the analysis concerning the equities and the bond market. But I really want to ask you this. Do you think that the Nigerian stock market is getting enough patronage, enough interest, especially bearing in mind that the Nigerian population is a young population? Do you think that young people do understand the stock market and want to take advantage of the stock market? Vis-a-vis what we're seeing right now, a lot of young lads are really investing in crypto, digital assets, investing. Some that have the money want to invest even in real estate assets and what have you. What else again? There's something in my mind, but I can't bring it out now. But the different categories of investment that you're seeing young people navigate to or go to, be attracted to right now. Do you, at least just oppose it with the year 2022, do you think that the Nigerian capital market is really drawing the young population to it? If it is not, why is it not doing that? If it is, tell me why it is.
Okay, thank you, Nancy. We must understand that the young population that we have in Nigeria, have a different mindset. Their mindset is not all about putting down investment today and coming back in another 1 or 2 years to harvest, to do a bounty harvest. But what most young people look forward to is something that can give them quick money. Something that can, in the next 1 month, in the next 2 months, they want to see the investment grow to as much as 50%, even if possible 100%. So, with that mindset, you are not likely to see many of them play in the stock market that doesn't behave that way. Nigerian stock market doesn't behave that way. Stock market around the globe, we don't see markets behave that way. Where you put money today and you want to take almost 100% return in the next 1 month. In the next 1 month, market generally, either it's equity or fixed income market, they don't behave that way. But it's only that, and that's why you see that many of them that are impatient they go into either crypto or they go into what they call Ponzi scheme. Not minding whether they can lose the entire money. They just want to, to gamble whatever they have today to be able to get whatever they can get tomorrow. So, for that reason, that may be a challenge for this young population. Okay. But the truth, however, is that they can be encouraged. They're encouraged to come to equity market and fixed income market, and discouraged from going to those aggressive, doing aggressive investment or investing in asset class that one cannot really predict what the outcome will be. Mm-hmm. So for me, government and regulators, the securities exchanges themselves will need to do more by encouraging listing of securities that can also that are growth bound, that can have some kind of accelerated price appreciation, especially for the type you are beginning to see now with the listing with the approval of what they call it, tech board on the NGS. That is a way to also attract them to come and play in that space. But of course, that one also has a proviso. You can only come there if you are a qualified investor. If you understand the dynamics of that market. They don't want you to come and invest in fintech companies that you are not sure what will happen to them in the next 1 year. So they want you to be sure that you understand the dynamics of that market and particularly the fintech space. So with that we are likely to be seeing a listing of securities around that area. That might attract young population to the market. And again, the most important thing is to see how best we can manage inflation. Once we can manage inflation to a point where nobody is afraid of what will happen in the next 1 or 2 years, everybody can plan. Of course, we see young population also embracing our local equity market at the same way they will embrace the local fixed income market to be able to hedge their risk. I think the most important thing is to be able to manage inflation. So once we can bring inflation down to something as low as 5%, 6%, 2%, why not? They'll be here. After all, in other economies, they are there and they are playing well in those markets because inflation are.
Okay, thank you very much, Mr. Tajuddin Lolayinka. If you can hear me, I think we've gotten really the crux of what you're saying. Thank you very much, Mr. Lolayinka, for joining us today. I've been speaking with Tajuddin Lolayinka, who is the managing director at Wyoming Capital and our partners. I guess the core of what he has said really is caution. Jeff Bezos did say just a few days ago, Jeff Bezos is one of the world's richest, whether the fifth now or so. He did say, hold on to your money, but that's concerning their own economy. Hold on to your money. You may just want to rethink buying that refrigerator or something that you want to buy now. But, you've got to listen to investment advisors here in Nigeria. That's the much we can take on today's edition of the program. Thank you all for joining us. Be the best you can be that change that you want to see. Nancy Nigeria.
Prioritization of welfare and well-being of members of the armed forces and their families takes center stage as Nigeria marks another armed forces